Hello, I'm now with Mr. Akhilesh Kamkolkar, founder and CEO of ORB Global Investments, and he's based in Australia. This company is involved in asset management and also in advisory services. Welcome to our program.
Thank you, Eternal.
Yes, let me start by asking you about the latest development of your company here in Bangkok.
Yes.
You have just formed a joint venture with a company here.
Correct. Orb Global Investments Australia is teamed up with a Swiss-based private wealth management company called Top-Notch Private Wealth Management. Together we've formed Top-Notch Global Asset Management here based in Thailand. What we provide is numerous things. I think the venture itself, Orb's expertise being in funds management and advisory, and Top-Notch's expertise lying in expat services, discretionary portfolio management, insurance products and the like, forms a strategic alliance which is we think is going to be very successful.
Have you got a license from the Securities and Exchange Commission?
Absolutely, absolutely.
How large is your fund? Tell us about the scope, of your management operations. Yeah.
Sure. Well, currently at the moment we have just over 200 million under management at the moment. We are looking at we specialise in commodities and currencies. These two particular markets, being in those two niche markets, allows us the ability to really focus on those two asset classes. We have no exposure to stock markets. Yes, for those who do know me around the world know that I'm somewhat controversial when it comes to stock markets. I believe that stock market prices are very fake, in the sense that with all the central bank government interventions that are happening to prop up the markets.
They're all bubbles now.
Exactly, right. So, and it's caused a lot of problems around the world, inflation being the biggest one.
So how do you plan to bring your expertise or your management to this local company, Top-Notch Global Asset Management, and how do Thai clients or investors here benefit from the company?
From our research, we've found that locally in Thailand, not a lot of people know about the commodity and currency markets. Most people are invested in stock markets, and generally speaking, with the sort of expat as well as the local Thai people who do invest in foreign companies based in Thailand, they're mostly invested in UK stocks, US stocks, which are probably two of the hardest markets to really decipher and to make good investment judgments in order to not only grow wealth but protect their wealth. In this day and age where volatility rules the market, and consumer sentiment can change in a heartbeat with one comment from Bernanke, for example, you need to be on the ball. And I think long gone are the days of buy and hold strategies. Those strategies don't work in today's environment. So the expertise that we can bring is we focus on day and swing trading. We take advantages of daily profits, and sort of the theory is if you can put credits in your account every day, as opposed to buy, hold and hope.
Is this what we call day trading?
Well, day and swing trading. So we look for not just the daily
What's the difference?
Moves. Okay, so basically with a day trade, you are in and out of the market within the same session. Essentially, say for example, unemployment numbers are coming out today in the US. We know that the market is going to move on those unemployment figures. So we're going to take advantage of that particular move, and that's one trade, for example. Now, there's numerous economic fundamentals that happen throughout the globe.
How about swing trade?
Swing trading is basically what we're looking for are the trends within a shorter time period of frame. So essentially, one trade could last from 24 hours up to a week. But that's pretty much as long as we're looking to hold that.
This is pretty much technical exercise, isn't it?
Well, it is somewhat. The way I explain it is it's 80% fundamental, 20% technical. So we take the fundamentals that are coming out, for example, being commodity experts, we look at, let's just say now is the time in the US where they harvest soybeans or wheat or corn or whatever it happens to be. We know the markets are going to move once the exact number of acreage and how much corn, soy, wheat is being produced. And we only know that during harvest season. So the market will move, but it doesn't necessarily move in one hit. It will take a few days for that move to happen. Therefore, we try to take advantage of that.
Very good. So how large is the size of the fund here in Thailand that you plan to raise in the initial phase?
I don't think it's a case of we're looking to, create a fund that is, $1 billion or more. If it happens, it happens. What we're looking for is clients
providing advisory services, I mean.
Well, yeah, I mean, in that sense, well, the number is unlimited, really, isn't it? At the end of the day, what we want to bring to the local community is what is the core of my particular business, which is social responsibility. We use financial markets as our vehicle to not only create wealth and protect wealth for clients, and on top of that, intergenerational wealth, but we do a lot of socially responsible activities as well. An example of this would be creating schools in poorer communities or underdeveloped communities. We teach 18 to 30-year-olds how to become self-sufficient in teaching them how to trade, how to execute. We have our supply chain is very distinct. Computer companies, internet companies are giving us free laptops and internet use. For these people, obviously they're not going to be able to afford it. We also fund them with an account. The money that they earn trading after learning our strategies gives them an income. A percentage of their income will go to their respective communities. Their communities will buy food from local suppliers of rice. We build water wells, and we do a lot of those things. So, in essence, the crux of the company is, yes, to create wealth for our clients. The offshoot of that is also, with those profits, the company will take funds and use that to invest into projects, not only at the people level, but also at the environmental level.
Okay, very interesting. So the investment exposure will not be limited to the domestic market, but also in the...
Oh, no, it's definitely a
global...
Yeah, it's definitely a global presence. We currently have offices in Australia, Hong Kong, now Thailand, and also we'll be opening up London by the end of this year.
Okay, very well. Going into the commodities and the currencies, which are your main expertise,
yes.
How do you see the prospects of the commodities? Let me go to gold.
Sure.
Okay.
Yep.
Will gold be shining this year? After some battering, last year, gold really made some headline news, but it had been, battering down.
Absolutely, absolutely. I think most people may disagree with me here, but my view is that at least up until the US elections in November, I think gold will be either stable or much lower, depending on what happens in between. Now, when I say what happens in between, I am specifically talking about the Eurozone in that respect. If the European banking system does collapse, it will have an on-flow effect. The US dollar will rally. Generally speaking, when you're talking about commodities, because commodities are traded in US dollars, the futures contracts, the US dollar is obviously a pertinent thing when it comes to commodity pricing. The second thing is inflation. I believe going into the US elections from now till November, we're looking at a US dollar rally. If the dollar rallies, commodities will fall.
They go
opposite
directions.
Gold is a very different commodity, however. Gold can move based on inflationary expectations. It is an inflation hedge. It is an economic hedge. Prior to gold being in the eye of the media, it used to be oil. That's why a few years ago when we saw oil peak at $140 odd, that was purely based on economic fundamentals of inflation, global inflation hitting the markets because of low unemployment, not enough cash flow, etc.
I see. So what's the prospect of gold after that? I mean, after the U.S. elections?
I definitely think gold
Are you
is
suggesting
going...
that somebody's trying to manipulating or suppressing gold prices?
No, not necessarily. I think it would be a case that there's two sides of this. There's the actual financial market side of it, and then there is the global fundamental side of it. The global fundamental side says if US dollar rallies, commodities will fall because they're priced in US dollars. The flip side of that is, as an inflation hedge, people will use it to buy because it's a safe haven asset. Now, after the elections, I do believe gold is going much higher. I won't say a figure, but I'd be saying anywhere between sort of 22 to 2,500 potentially.
Oh, I see.
And
that's
it
a
is
huge
a good
jump,
investment
from this current level.
But I think more than gold, the place you will really want to be investing in right now is silver and palladium.
I see.
Because those two products are used a lot more worldwide. It's been a sort of a secret kind of investment that most people don't know about, simply because it's so cheap. No one thinks of silver. Everyone thinks precious metal, right? So the precious metals are gold, platinum, and palladium.
But are there enough physical gold or physical silver, for funds, to go after?
If you're talking about futures markets, obviously liquidity is there, so you can trade silver, not a problem. If you're looking to buy physical silver, silver production at the moment is low, simply because of high costs due to inflation around the mines around the world that are trying to physically get the silver out. However, at the same time, there's actually an abundance of it that just can't be sold enough. Now, if you look at the price of silver over the last 12 to 18 months, it's been so volatile, up, down, up, down, up, down. But these moves, this is what creates profits.
Do you anticipate the Federal Reserve to mount on another QE or quantitative easing program? And if so, how would it affect the commodities markets or also the currencies market?
The first part of that question, I would definitely say absolutely no way is the US Federal Reserve going to implement any more QE in the markets for many reasons. Firstly, it's an election year.
Okay.
Secondly, the only reason why the Fed would ever do another QE is because of a major crisis. Now, there is potentially looming a major crisis, which again is the Eurozone. And if that happens, yes, there will be more QE. But at the end of the day, the US has more than enough debt on its hands. And,
So the financial system in the US is pretty much stabilized at this moment?
Well, it's... I would never say that the US Federal Reserve is stabilized. What I would say is that the focus is not on the US anymore, and you are in the middle of earnings season, so different aspects are being looked at the moment in those particular markets. However, everyone's eye is on what we call the PIGS, which is Portugal, Italy, Ireland, Greece and Spain, and the Eurozone. Okay,
so let's focus on Europe.
Yep.
The latest elections, in Europe, from Greece, France and elsewhere, show that the peoples, are upset, about the austerity program imposed on them.
Absolutely. I think initially when the austerity programs came into place, we're talking about Greece at this point, people were annoyed simply because I don't think the people really realised how bad the government was in terms of their debt to GDP ratio. They were spending way more money than what they were actually bringing back into the country. Now, this is clearly a problem. Their debt to GDP went up to almost 140 to 160%, which is really unheard of over the last 100 years. You've never really seen something like this before. What that basically means is the people were annoyed because, firstly, to counteract that, companies had to fire a lot of people. A lot of people lost jobs. Unemployment goes down. People have no money, no disposable income. Consumer spending is down. Food inflation was rising because of commodity prices rising. Because the US dollar was essentially being battered down. This all comes together and creates what we have already seen, which is riots. Generally speaking, these riots were not just based on we want jobs and income, we want food now. It kind of went on to other places such as Tunisia, Egypt. You're seeing it globally, the impact of commodity inflation. Why Greece was important is because it was the first one to actually come out and be transparent.
It's like a testing case, right?
It really was. Now, does Greece stay in the Eurozone? That remains to be seen. However, I don't. If Germany decides that they want to stay in the euro dollar and part of the Eurozone, then I think they will let go of the peripheral countries out of the Eurozone. So essentially, I mean, one theory is that Germany...
So these countries will have to go back to print their own currencies.
So Greece will go back to drachmas. Italy potentially may go back to lira. However, that would be so devastating to the country. I don't even want to imagine how the people would be living there. It would be highly, highly disappointing if that happened. The alternative is Germany walks out. They go back to Deutschmarks and everyone else stays in the Eurozone. France may stay in the Euro because at the end of the day, there's the three biggest economies is Germany, France, Italy in that order. Italy is in a very, very bad position at this point. The one to really take into focus is actually Spain. Spain is the one that's on the brink of bankruptcy at the moment.
So there are no way out for the peripheral countries in your view? Because at the end of the day, they will have to think about their own survival.
Absolutely.
The best, what's the best exit plan?
The best exit plan. I mean, I think personally that the best way to do this is to essentially live with a few more years of pain, clear out all the junk debt that is in the markets, basically bite the bullet. You can prolong this and it will take 20 to 30 years for them to come out of this particular crisis, right? That is a very, very long time for people to be starving with no jobs, etc.
Do you think the people will understand this? With the leaders coming out, we have to bite the bullet over the next 10 or 20 years.
Look, I've got to be honest.
Because they have nothing now.
I'm not a politician, so I'm just going to be actually straight. Politicians will always say, our country's fine, we're doing okay, we will fix our debt problem. The way in which they're fixing their debt problem is the problem. You cannot fix a debt problem by issuing more debt. That makes no sense to anybody. QE is the same thing. I think the US Fed did Operation Twist. The ECB has IMF funding coming through. They've got, forget the name of it.
Billion.
There's the Siphon funds coming through. There's so many different things that are coming into play here that, how are they supposed to repay all this debt? We've already seen it with Greece. Greece really is the test case. Greece borrowed all the money from the IMF. They borrowed money from private investors. Bondholders had to literally take a 70% or more haircut on all their investments.
100 billion US dollars.
That's right.
Gone.
And in a day. Not even in a day, in an hour it left.
So how do you see the victory of François Hollande, the new president of France? How is that going to transform Europe?
Okay. And this is my personal view. I think it was a very bad decision. I think Hollande is he's a hardcore socialist. I mean, this is going to greatly alter the political dynamics of the EU. And what it will essentially do is it'll weaken Germany's push for austerity measures. Essentially, either one of two things is going to happen. He's actually going to stick to his guns before the political race and do what he says, in which really some of his initiatives are quite good. However, if he starts to soften down his, as most politicians do around the world, unfortunately, is they don't necessarily implement what they have actually wanted in the first place, simply because they don't know the real internals until they get into government power. Then they find out, they look at the accounts, they look at the debt to GDP ratios, they look at all these different aspects and they say, well, I actually don't think I can based on these numbers.
Okay.
This is where transparency is an issue.
Okay, so finally, how do you see the prospects of Asia rising or prospect of investment here in Asia?
In Asia, I think this is the best place to be. Asia Pacific, I should say. China is in a very good position. Now, I know a lot of people talk about China, but at this point, they actually do have their own problems as well. They are highly cashed up, but the problem is at this point in time in the world, the Chinese people are the #1 consumers, spenders on the planet. There is more money being spent by Chinese people than anywhere else in the world. Essentially, what that has done is that it has created a massive inflationary problem. The local Chinese government has two issues. One, the inflation. Two, because they're pegged to the US dollar, and as we know, Tim Geithner from the US has been having conversations to, really, as our dollar moves, your currency should be moving as well. And some days they refuse. They say, no, we're not moving it. Because what they do know is if they continue to rise the Chinese local currency, the people will fight it tooth and nail. The last thing they want are internal local riots happening as well. And I think the two things that come into play here is what we as top-notch global asset management can do for clients in terms of advisory and portfolio management. What we can do is, without sounding like everybody else, but diversity in your portfolios is very important. Look more into the commodity and currency asset classes. Look into the bond market classes. We use a very trusted company, Interactive Brokers, for all our platform trading. This company is phenomenal. They have billions under management. They have deep liquidity. And at the end of the day, when you match a certain company with a perfect supply chain of people that surround them in a certain way, only success can come from that. And I think if you've got the right idea and your game is not basically give me your money and we'll do what we can and return a negative percentage, we've had phenomenal returns, up to 60 to 80% per annum. That's unheard of in most places.
And our time is up. Thank you very much for joining our program, Mr. Kamkolka.
You're welcome. Thank you, Tanong.
Good luck.
Thank you.